We announced at the beginning of this year a plan to sell $300 to $500 million of what we deem to be less strategic multifamily and land assets over the course of the next 12 to 24 months. The intention being to monetize smaller assets for which we believe there's still something in the form of life in the transaction markets to be able to realize values that are at or close to the intrinsic value of those assets.
With me today is Mahbod Nia, CEO of Veris Residential. Thanks for stopping by today.
Thank you for having me.
So what are you seeing in terms of the supply outlook, and how is that impacting resident turnover, rent levels, and new development going forward?
So Veris Residential is focused on high growth markets in the Northeast corridor. We have approximately 50% of our assets concentrated in the Jersey City waterfront, where we've seen very limited, almost no new supply over the last couple of years, and very few units, only 3 projects, about 3,000 units scheduled to come online over the next 2 to 3 years. And so as such, we've been able to continue growing rents as a significant operator with the highest quality, best amenitized product in that market. If you look at that market over the course of the last 15 years, it's doubled in terms of unit count, from around 10,000 units to around 22,000, 23,000 units right now. And during that 15-year period, that new supply has been seamlessly absorbed. So it's a very strong in-demand market. It's a spillover market for Manhattan. And if you look at forecast population growth for over the next 7 years, which is anticipated to be anywhere in the region of 8 to 15%, and you look at the projected supply pipeline over that time frame, the suggestion is that there's anywhere between 27 and 36,000 units shortfall in that market going forward.
So can you point to an interesting transaction or development that will be impactful for Veris in 2025 or into 2026?
If I had to point to one, I would say it's our recent consolidation of our partners' joint venture interest in what was the Jersey City Urby that we've now rebranded as the Sable. We owned 85% of this asset, and through the acquisition and consolidation of our partners' minority interest, we were also able to rebrand that asset, bring it under the Veris operating platform, operated under our vertically integrated, tech-enabled operating platform, and extract approximately 3 cents of additional earnings from that one transaction, which, to put that into context, relative to full-year core FFO, is about 5% accretion from this one transaction.
And in your meetings with investors, is there a key strategic theme that you're focusing on?
Yes, we announced at the beginning of this year a plan to sell $300 to $500 million of what we deem to be less strategic multifamily and land assets over the course of the next 12 to 24 months. The intention being to monetize smaller assets for which we believe there's still something in the form of life in the transaction markets to be able to realize values that are at or close to the intrinsic value of those assets, to take that capital and predominantly use it to further delever and strengthen our balance sheet, and also free up some capital to give us the option to be able to repurchase up to $100 million of our own shares, taking advantage of the current discount to net intrinsic value.